Today, everyone, this is Patrick from EasyFX Code Training System, and it's Saturday, the 18th of December, 2021, and this is the weekly technical analysis for spot gold and dollar yen for the fourth week of December. And with just a couple more weeks till the end of the year, next week will be already next Saturday is already it's already Christmas Day, so this will be the last video for this year, and I will start again at the first weekend of the year for next year. Right, so do have a good holiday break and a safe holiday as well. So let's take a quick look at spot gold, where you can see a long wick spike down here on Wednesday. That was due to the FOMC announcement, and after that it bounced back up, and after this bullish hammer candle here, there was a bullish move on the Thursday right into the resistance zone and above 1800, continued for most part of Friday, but then blocked at these upper wicks here and pulled back down, close right at the daily 200 EMA, just below the 1800 level. So it started with the trigger from the FOMC, where they did announce tapering earlier than expected to end by February 2022 or March 2022, earlier than expected. And although it's hawkish and bullish, but it initially took a dip with the US dollar spiking up higher. But then it reversed and turned around and turned bullish all the way and right into Friday, but then gave some of the gains back on Friday. So we'll see the US dollar index to see what happened as well. So initially it was just likely priced in that the Fed was going to end their tapering earlier than expected, but this was much earlier than expected, and leaves the door open for additional rate hikes for next year, perhaps up to even 3. So which is quite hawkish, but the market just flipped and reversed it, whereas the euro and the cable gave back all the gains with the US dollar recovering, but the spot gold here has managed to stay overall fairly bullish for the week. So let's take a look at the weekly time frame. It did close bullish with a long lower wick here, but it's likely just going to consolidate for the next couple of weeks till the end of the year. So we'll take a look at the US dollar to see US dollar could attempt to push up higher. And next week there's only some medium impact news with the final GDP and consumer confidence, and the key one with the PCE price index, which is an indicator for inflation, which the Fed is currently tracking as well, and as well as some durable goods orders figures on Thursday. So let's take a closer look on the 4-hour time frame to see how it panned out. And that was the initial dip lower, but a strong bullish bounce, climb up all the way to the 200 period EMA, but continued through on Friday. Attempt to test this previous high, last month's high, and it did form a high at 1814, just above 1814, before turning around the last 2 4-hour candles. So overall, it's still a bullish recovery. It could attempt to push up higher again next week. But with this 2 long weeks on either side, that's likely indication that it's going to, price will consolidate, and we'll see this weekly pivot move up higher as well. So it has finally broken out from this consolidation for the last week. Let's remove this now. So this zone is still a resistance zone with the monthly pivot and above the 1800. And it did almost hit the 1750 level, but that's where the key support zone is. And it spiked through this swing low. Let's leave it there for now first, and that's an intermediate support. All right, let's take a look at the US dollar index, where initially it did attempt to climb up higher, but retested the previous month's high and then retraced all the way back down into this rising trend line that was from the previous weeks and previous month. And that has found support there with a strong bullish bounce on the Friday to recover. So if we look at the weekly time frame, that's a good bullish close for the week. And there could be another attempt to test this recent high to follow through to the 200 pip extension at 97.15. So we'll see if it's able to test that next week. If it does, then it's likely going to be rejected there and pull back to consolidate between the 162 and the 200 pip extension. All right, you'll see how bullish the US dollar is going to be. So it did attempt to break out higher after the hawkish FOMC statements, but retrace all the way to find support at the lows, recent lows, and then recovering back on the Friday with a strong bullish move there. Okay, let's move back to spot gold here. So likelihood of consolidation next week between the 1800 and the 1760 zone. That could be the consolidation area. So the range is wider now for next week. Let's move on to dollar yen, where initially it did climb up higher on Wednesday and attempted to break out higher through the resistance zone above 114 and the fib. but gave it back on Thursday and fell further on Friday, but managed to find support. Let's move this support zone here now. So above the 113 and the 38 fib retracement. And managed to bounce higher, try to close right at the monthly pivot. So this is likely going to consolidate between the 2 fibs still, between the 21 and the 38 fib retracements. So also between the 113 and 114. Let's take a quick look at the weekly time frame, and that's a bullish close again and creeping up. On the 4-hour time frame, that was the initial attempt on late Wednesday to push up higher after the hawkish FOMC statements, but then finding resistance at the 21 fib at the 114.15, and finally gave it all back suddenly, actually quite suddenly, on Thursday night. Just gave it all the way back to the 200 period EMA, and then continued on Friday before recovering back up to the monthly pivot to close the week. All right, so support is still safe here at 113 and struggling to climb up above 114. So we'll see next week with the US dollar index. If it does break out higher, we'll see how the US dollar against the Japanese yen perform. Okay, so do stay safe during the holiday period, and we'll catch up again at the start of the new year. Have a good trading week the next couple of weeks, and cheers for now.